Hey guys, this is part 5 of the real estate investment series where I'm going to talk about tax benefits associated with a rental property. So of course, there are tax benefits involved with becoming a landlord and renting a house to somebody else. In today's video, we will discuss the different ways real estate investors with rental properties can lower their taxes legally just by owning a rental home. And with this, I want to give some background. If you're a regular person working a normal job, you typically have a W-2 form at the end of the year where you'd have to file with the IRS. You typically get taxed at the normal federal rate for your income, and the biggest deductions that you can take are either the standard deduction, plus the 401k, maybe the HSA, and also the IRA. That means if you're making $100,000 a year and you're single, your tax rate is probably going to be as shown right here. If you contribute $19,000 to your 401k, $3,500 to your HSA, and $6,500 to the IRA, your taxable income is now going to be not $100,000, but definitely going to be lower than that. If we take a look at a rental property, the playing field is going to be different. Just like with any other business, the gross income is not the income that you get taxed on. That means even though my rental house has a gross income of $2,275 a month, I don't really pay taxes on $27,600 per year. So as you go throughout the year of owning your rental property, you should start an Excel spreadsheet and note these categories down and make sure you save receipts along the way relevant to your work with the rental property. So the categories I'm talking about are depreciation, interest, insurance, tax, utilities, maintenance, including the property management, repairs, and then travel. So right over here, I'm showing my spreadsheet, and it's so important to track your expenses in a spreadsheet like this year over year. This makes it easier for me to reflect when I'm doing my taxes. In the tax software, you would note down your reported 1099 form income as well as the categories that were previously mentioned. And after deducting all of these items, your property should ideally be as close to zero net income as possible, especially after the massive straight line depreciation expense, which is basically where you take your property value and then divide it by 25 years and deduct it in a straight line going forward from there. If you wonder how people like Jeff Bezos pays $0 in taxes with Amazon, as a lot of articles suggest, taking advantage of all these different tax deductions is exactly how it's done. And that, my friends, is how you can take advantage of the tax situation when you own a rental property. With that said, guys, make sure you're populating those Excel sheets, saving your receipts, and making sure you build that awesome case for when you file your taxes at the end of the year. Thank you guys for watching this video. If it helps you out, drop a like down below, subscribe if you haven't already, and I hope to see you in the next video. Goodbye.